James, thank you so much for joining us here at SuperInvestor. In this sort of environment, what would you say is the right way for this industry to be approaching both the economic challenges and also perhaps the perception challenges of the industry itself?
Well, I would say there probably is more than one right way. I think that would be correct. There is some nuance to what's going on. It's different in different sectors as it is in different countries. I think particularly in the UK we've got a perfect storm of rising inflation, political instability, shall we call it, the end of the pandemic, I hope, Brexit. There's a number of different, let's call them tailwinds that we're having to deal with. So I think the first thing is understanding what is going on and what the implications are. As an operating partner, my approach has always been diagnosis before prescription. So I think initially, at least, we need to ask some good questions of our investments, of our management teams and our businesses, listen very hard to what they're dealing with, and then formulate the most appropriate response. But to the second part of your question, I feel really strongly that as investors, we should be doing more to support our businesses. I was a CEO in the last recession in 2008-9. I didn't really feel that I got that support. In fact, I actually felt I got pressure from my investors. It actually made the job harder, made it more difficult. I'm hoping that the culture in our industry has changed somewhat in that 12 to 15 year period. And what I'm looking for now is empathy. I'm looking for my colleagues in investment circles to get behind their management teams and their investments and support them through what I think are going to be some very difficult times.
And you feel that change in approach could be not just good for how this industry is perceived by the public, but for the bottom line in the end, that's the way forward to making more money and improving investments?
Absolutely. I think, listen, I'm going to be super candid. When I came into this industry 17, 18 years ago, I think my purpose was to make some money. I can be unashamedly honest about that. But I think as I've got older and matured somewhat, I've realised that actually having a purpose, looking for positive growth, I appreciate this is a subjective term, but it certainly means something to me, but looking for positive growth, looking for purpose-led businesses and making a return are not mutually exclusive. I think you can do both. I genuinely think you can do both, and I would hope that's what more and more people in our industry are striving towards now, is achieving both goals, because it can be done.
So in terms of that, what will effective look like? What do teams need to look like to be able to be purposeful in that way?
Well, I think there's a couple of things. I think first of all, the founders, the management teams and the businesses themselves, they clearly need to have a mission, an ambition, a purpose, whatever you want to describe it as. I think it needs to be thought through and articulated and communicated down, not just into the investment team, but into the business. It's got to be something that everybody lives and breathes on a daily basis. And then I think we also have to be practical. I mean, there's no doubt this is about as tough as it's been in my career. I've been doing this over 30 years. I never thought it would be any tougher than 2008-9. This might be. It's a different kind of downturn. It probably will last longer, but it's pretty tough. And so practical steps are needed too. I think we need to be clear that as investors, supporting our businesses means not just a pat on the back, but making sure they're properly capitalised, they've got healthy balance sheets, but also asking difficult questions around cost bases and making sure that businesses operationally are set up in line with realistic expectations of what can be achieved over 23 and 24, because it's definitely going to be more difficult than it was last year, no question about that. And
presumably you would expect to see certain sectors thriving more in this sort of environment too.
Well, I think that's the nature of things. That's been my experience previously. I mean, look, there's some simple stuff here that would be easy to understand for anyone. For example, in COVID, if you were in the hospitality industry or the ticketing industry or the travel industry, it was enormously difficult, and I would describe that as a sort of a force majeure event. That's not, you could be an outstanding management team with a great proposition and a wonderful business, But I'm sorry, if nobody's traveling or nobody's coming to your restaurant or you're not checking into hotels, there's nothing you can do about that. And therefore, that's what I mean about perhaps scaling back a little bit and making sure that you've got a business that's resilient enough to be able to weather the crisis and get through the other end alive. So yes, I think there will be winners and losers. You know, if you think back to the previous recessions, really well-known businesses, Uber, WhatsApp, you know, these are businesses that were founded in a recession. I mean, there are going to be opportunities for some sectors, there's no doubt about it. I tend to work quite a lot within the SaaS industry, software as a service, and I'm hoping because of the way in which our commercial models work, annually recurring revenues, I think we'll be a little bit more protected, not completely so, but a little bit more protected through 23 and beyond.
SuperInvestor is the largest global gathering of LPs and GPs like this. If people were to have a conversation with you here this week, what do you hope they'd take away from that chat to you?
Well, I think what I can bring is the perspective of somebody who has been on the other side. So, you know, I absolutely describe myself as a manager, as a salesperson. You know, that's my stock and trade, if you like. I've worked in businesses, I've run businesses and sold businesses. I've done it pretty well and I've done it pretty badly, like most of us. What that means is you accumulate over a long period of time experience of how to do things and how not to do things. And I mentioned earlier this concept of empathy, and that's a big disconnect I've encountered in my career, that lack of understanding from the investors towards the management teams. And so what I would be, I think, hoping to get across to investors is just how difficult it is to run a business, just how difficult it is to run a successful growing business, and how enormously difficult it is to do that in tailwinds, significant tailwinds. And I hope that they would take that sense of realism and pragmatism away with them, and perhaps have a more reasonable set of expectations about what's actually achievable in these times, in these circumstances.
Because people talk a lot about this being a relationship business between GPs and LPs, but it actually should be that with the portfolio companies too.
Oh my goodness. But the relationship thing's really interesting, because I can remember going into investment rounds and working with investors and thinking, oh, I've got great chemistry with this person, I can see myself working with them next 5 years. And at that point where you're selling and they're buying, it's all great. But then guess what? COVID comes along, or political instability comes along, or Brexit comes along, or whatever the hell's going on in Eastern Europe. Actually, that's the moment when you should be reevaluating the relationship, because that's when you really need your investor. They're the people with the capital. They're the people who can come in and stand shoulder to shoulder with you and say, don't worry guys, we've got this. You know, one of the great things about working with Frog Capital, actually, if I may, I was so impressed with the way that the senior partner team got behind their businesses in the first lockdown of COVID, where you had a bunch of terrified founders and management teams going, what do we do? And they just stepped up and said, guys, we've got you. We'll make sure you're fully funded. We'll make sure your balance sheets are looking healthy. We'll make sure that you're going to be resilient through this period, however long it takes. Some investors out there, I think, saw it as an opportunity for some pruning, if I may use that term, to make some long overdue difficult decisions. We didn't do that, and I'm really proud of the team, and I think it's happening again now as we move into a new, hesitate to use the word crisis, but a new difficult time.
Do you think the industry is evolving in that direction, in that right direction, as you sort of described it and illustrated it so well there, in terms of new, younger investors coming in who have perhaps a different attitude towards their responsibility socially? Definitely. I'm so pleased to say that it's changed just in the short time I've been working in the industry. I can remember clearly in 2008 staring down the barrel of running out of cash, effectively my investors were saying to me, well, what you need to do is cut some costs, i.e. make people redundant, and you need to work harder. It's not the most profound contribution, let's be honest,
But what's happened is that the world's changed. I mean, I know that. I've got teenage kids, and the way that they look at the world is demonstrably different to the way that I did when I was their age, and I mean that positively. I think businesses need to be seen, as I said, contributing to society generally, being more accountable, being more inclusive. I love it. I think it's great. And actually what's happened is that those attitudes in society, those cultural outlooks of starting to permeate into private equity and venture capital. Good. I'm more and more supportive of it. I go back to what I said to you at the start. I still think it's possible to do good objectively and make a return. You can do both things at the same time.
A great note to end on, James. Thank you so much for joining us. Great to talk to you today.
Not at all. All the best.